Day 29, continuing with the questions for the third chapter. So we were on question number 11. It's a pretty big question. So let's continue with the second part, B part. If the maintenance margin is 25%, how low can Xtal's price fall before you get a margin call? Okay, so basically the formula is 100p minus 5000 divided by, 1000p minus 5000 divided by 1000p equals to 0.25. So P equals to $6.67 per share. Part C, how would your answer to B change if you had financed the initial purchase with only $10,000 of your own money? So instead of 15,000, it'll be 10,000. So total cost is 20,000. Loan will be 10,000. So 1000p minus 10,000 divided by 1000p. Equity by market value. So yeah. Okay, so the P would be $13.3 per share then. Part D, what is the rate of return on your margin position, assuming again that you invest $50,000 of your money? If Xtal is selling after 1 year, so this is now it's going to include the rate of interest as well. So yeah. Part E. Excuse me. Part E is continue to assume that a year has passed. How low can Xtal's price fall before you get a margin call? After 1 year, loan balance will be 5,400, maintenance margin 25%, price for margin call. Equity equals to 1000p minus 5,400, market value 1000p. 1000p minus 5,400 divided by 1000p equals to 0.25. P equals to $7.2 per share. New question. Answer 12. Question 12. Uh, Suppose that you sell uh, yeah. Suppose that you sell short 1,000 shares of Xtel, currently selling for $20 per share. Give your broker $15,000 to establish your margin account. So wait 1 second. Let me read that part again. Yeah, okay. Um, Suppose that you sell short 1,000 shares of Xtel, currently selling for $20 per share. Uh, Give your broker $15,000 to establish your margin account. So the proceeds from the short sale, that'll be 20K plus the 15K in equity to establish the margin. So that's 35K in total account balance. If you earn no interest on the funds in your margin account, what will be your rate of return after 1 year if Excel stock is selling at $22, $20, $18? Assume that Excel pays no dividends. So at $22, it will go up. So 22,000. So account balance is 35K. 35K minus 22,000. So that is 13,000. 13,000 will be left. And then we'll have to 13,000. Yeah, 13,000. Um, 1 second. Yeah, total account value, so 35,000 times. So yeah, 13,000 final equity, return 13,000. So yeah, return first will be minus 13.3% because we will lose 2K. And then so yeah, let's go over that again. 1 second. So yeah, when the price moves up to $22 from $20, we'll have to buy the shares back at 22,000. So we'll pay that out of our 35,000 account balance. So we'll be left with 13,000. Therefore, our equity will be dropped from 15,000 to 13,000. Lose 2,000. That is minus 13.33%. $20 just cost to covers, return 0%. $18 return 13.3% positive. So that's part A. Part B is if the maintenance margin is 25%, how high can Xtel's price rise before you get a margin call? So for this one, you need what was it? Yeah, 35,000 total account value minus the total market cap, divided by total market cap. So not market cap, but like total share value, stock value. 35,000 minus 1000p divided by 1000p equals to 0.25. 35,000 minus 1000p equals to 250p. 35,000 equals to 1250p equals to $28 per share. So the maintenance, so the price triggering margin call is $28 per share. If it's $28 per share, triggers a margin call basically. Part C is redo parts A and B, but now assume that Excel has also paid a year-end dividend of $1 per share. So $1 per share that adds an additional cost, so to speak, because we have to pay that money back. So like that's $1,000. So yeah, instead of $22,000, you have to pay back $23,000. So then we'd be left with $12,000. So first case, when the price goes up to $22, we will lose 20%. Second, we will lose minus 6.67%, because even though the price doesn't change, we'll still have to pay the dividends. In the third case, it'll be 6.67%. So basically, a good idea is to not short companies which have dividends. Probably a good idea. Yeah, and the prices in part A should be interpreted as X divided. Sorry, feeling a little sleepy right now, but can't sleep. I have to focus on work. Try to, I don't know, work hard, I guess. Man, this is the tough part. I mean, they say it's gonna be tough the whole life, but I don't want to think about that like that, because that is a pretty grim life. Then just always being in this position. But yeah, it's like the starting is the hardest. So right now we're just starting to get into this life and get into this way of thinking and working. So it takes time, but like I think I can do it. So yeah, feel very scared. But yeah, anyways, you can have to come out. What's the matter with you? Yep. Anyways, yep. Yeah, we are done with that price. What are we doing here? Oh, okay. Okay. So in the margin call, like price maintenance thing, instead of 35,000 as a total account balance, we just do 34,000, because we're just with dividend paid, so equity after dividend paying. So yeah, basically that. So the price will be $27.2 instead of 28. So basically what we learned is that if we are shorting a stock, it's a good idea not to have to pay dividends or not have dividends on the stock, basically. 12. Yes, 12. I think we already copied it, so let's go ahead and paste it. Yeah, done. Answer 13. Here is some price information on Marriott. Bid and ask 69.95, 70.05. You have placed a stop loss order to sell at $70. What are you telling your broker given the market prices? Will your order be executed? So let's check. So $70 bid ask, buying, selling. $70. What are you telling your broker? Given market prices, will your order be executed? I mean, maybe. I don't know. We'll have to see. So yeah, we are telling our broker. So I'm telling my broker to sell the shares at $70. So given market prices, it won't be executed immediately. Stop loss is triggered when a trade occurs at or below $70. The current best bid is 69.95, below 70. The next transaction price is okay. But isn't the bid is already lower than $70? So should So the bid price is the highest price the buyer is currently willing to pay to purchase the stock. Ask price is the lowest price the seller is currently willing to accept to sell the stock. The bid ask spread, the difference between them, is exists because of market mechanics, dealer profit, and liquidity. Trade occurs when a buyer agrees to pay the ask price. The seller agrees to accept the bid price. Seller accepts the bid price. Trade price then becomes a new last trade price. Okay, understood. Your stop loss at $70 is watching the last trade price. Let's assume the last trade price was $70.1. The bid is 69.95. Ask is 70.05. Your stop loss is inactive because the last trade is above $70. If a buyer steps up and accepts seller's ask of 70.05, trade occurs at 70.05. Still no trigger. If buyer accepts an ask of $70, your stop loss triggers and becomes a market sell order. It will then execute at the best available bid within that moment, might be 69.95. I'm going to buy this car, most of them sell this car, least I'll take straight car so for Sunday. If I see one actually sell for $70,000 or less, I'll immediately list mine for sale at whatever the best buy is. Acha, okay. Understood. Yeah, so understood that. Pretty good, pretty good concepts. Uh, Question 14. Since these are pretty detailed questions, it's taking a lot of time. But I'm happy also. But again, it's always as if like if I had just unlimited time, I would. You know what? If I had unlimited time, then I would probably do nothing except like watch movies and shows and I don't know, just relax and consume all day. It's become a sloth. But yeah, we don't have infinite amount of time. We only have few decades. Then we're done. I have only like 1 decade, maximum 1.5, before needed to start a family starts, or you'll be called a psycho by everybody. So, anyways, here's some price information on FinCorp stock. Suppose that FinCorp trades in a dealer market. Bid 55.25, ask 55.50. Suppose you have submitted an order to your broker to buy at market. At what price will your trade be executed? Oh, this will be 55.50. And then second will be sell. Sell will be 55.25. Understood. Let's see. Let's see, suppose you submitted a limit order to sell at 55.62. What will happen? Sell. 55.62. So target price will be 55.62. Uh, 55.62, what will happen? Current 55.25. Since current bid price is 55.25, the order will not be executed since the target price is not met. So till point 8 is met, the shares won't be sold. Part D. Suppose you have submitted a limit order to buy at 55.37. What will happen? Buy at 55.37. So entry price. These are all the terms I've gotten from the front page paper trading thing I was doing. I actually made 2200 rupees today, which is like very, very small. It's like 0.22% of the portfolio, but whatever. Just a little bit of fun. Who cares? Entry price is 55.37. We are saying. So current asking. So we need to buy. Selling price. Okay. Okay. Yeah. Since current ask price is 55.50, the order will not be executed since the entry price is below the current ask price. Therefore, it won't go through. Yeah, that is the 14th question, not 15th question. Second last question, and then we have some more questions actually. We have some CFA problems. So these were just practice. These were problem sets from Kaplan and Schweizer. Pretty good stuff. In the CFA exam, I assume stuff like this is going to be there. CFA problems, it says. It's pretty good stuff. Anyways, let's keep doing it. 15th question is, you've borrowed $20,000 on margin to buy shares in Ixnay, weird name, which is now selling at $40 per share. Your account starts at the initial margin requirement of 50%. Maintenance margin is 35%. 2 days later, stock falls at $35 per share. Will you receive margin call? Okay, so first of all, we have borrowed $20,000 on margin to buy shares, and margin requirement of 50%. Sure. So 40. So we're buying 1,000 shares. Number of shares equals to 1,000. Share price original equals to $40. Total stock equals to $40,000. Equity equals to 20,000. Debt equals to 20,000. Margin requirement equals to 50%. I remember. Maintenance margin equals to 30%, not 30%, 25%, 35%. So basically, it is saying equity by stock value equals to 0.35, which would mean oh 40,000 minus 1,000 p divided by, wait, hold up, this would not be the case for me. Oh yeah, my bad. That's for shorting. Now we have 1000 minus the debt, which is 20,000. 20,000 divided by 1000 p equals to 0.35. So 35 0.35 times 1000, 350. What the hell? 350. Oh, right, that's too much. 350p 650p equals to 20k. 20k by 650 p equals to 30.679. 679. That is the price. Fine. And the question is, stock falls to $35 per share. So the first question is, stock falls to $35 per share. I won't receive a margin call because $35 is more than $30.679. And part B is, how long can the price of Ixnay shares fall before you reach a receive margin call? So again, it can fall till $30.679 per share, at which point I will receive the margin call. Answer 16. You know what, let me just put this in DeepSeek just to cross check the answers. There we are. Oh, hold up. Oh, okay, my bad. Just keep that there. Okay, go ahead. Oh, 15,000. 15th question. Go ahead. Perfect. 16th question. On January 1st, you short sold short one round lot, 100 shares of Four Sisters stock at $21 per share. Okay, so that's $2,100 of proceeds. On March 1st, a dividend of $2 per share was paid. April 1st, you covered the short sale by buying the stock, price of $15 per share. Paid 50 cents per share in commissions for each transaction. What is the value of your account on April 1st? Pretty interesting stuff. Okay, so I think we can do this. So the proceeds are $2,100, And then dividend of $2 per share. So dividends was $200. I should probably add the dollars. Symbols. And then we have April 1st covered the short sale. So we bought back at 1500. Bought back shares equals to 1500. Therefore, total cost equals to 1500 plus 200, 1700. Proceeds of 2100 minus 1700. $400. $400 will be left, which would be our profit, I'm assuming. Oh, you paid 50 cents per share for commissions as well. 50 cents per share, so that's $0.5 per share. So that's like $50 for each transaction. So there's 2 transactions, so that is $100. Commissions total $100. Therefore, profit equals to 400 minus 100, $300. That's it. Yeah. Is this done? Let me just cross check the previous question. That was pretty fun actually. It's pretty nice, pretty fun stuff. So yeah, we made $300 on no down payment. So it's pretty fantastic. Yeah, 30.77 per share. Oh, 30.7, same thing. 769. Oh, 679. 769. My bad. Whatever, it doesn't matter. Does not matter. Wait, hold up. How the hell? 20,000. 20,000. 650. 769. 769. Oh, I think I'm dyslexic. I wrote 769 and 679. So it's alright. It's okay. Let me check if I'm still recording. It's been a while. Yeah, thank God. That's fine. Yeah. 35%. So yeah, what else? Stock price 35. Yeah. Okay. Yeah. Yeah, sure. Again, it can fall. Oh, I mean, yeah. Same sort of situation. Oh, like that. I mean, I guess so. Sure, buddy. 35. Oh, wait, 35% maintenance level. Oh, that's the maintenance margin. This is completely wrong. Stock doesn't fall to 35%. Ah, it's wrong. Yeah. Sure. 1 second. Share price borrow 20,000 initial margin. Total purchase 40,000. Shares 1,000 initial equity 20,000. After price falls to $35. And that price did wait, hold up. Yeah, price did fall to $35. I'm right only. Yeah, I'm right only. Price did fall to $35,000. 35,000. Equity 42.86. Oh, like that. So we cannot compare the. Wait, hold up. What? No, we can actually. In the. Yeah. Wait. So, can we see if we get a margin call by comparing maintenance price and the current price, like say stock price fell to 30,000 like it says, and we know the maintenance price is 30.769. So we know that we won't see margin call, right? We can do it this way also, right? So let's see if that makes sense. Okay, yeah, perfect. Everything's fine. So yeah, it's all good. Yeah, okay. 16th question. Let's just put that. Double check our answer. Since there's like no answer key provided for the questions in this book, I have to manually put every question in DeepSeek and check the answers that I'm getting, so that there's no oversight on my part. So yeah, same thing. Yeah, $300 the profit, like I said. Pretty simple stuff. So we are done with the problem sets. Now we move on to the CFA problems. So CFA problems. It's very easy to get overwhelmed with this stuff. Especially when I'm tired and sleepy. But yeah, that's what scares me. It's like, it's the fear that even if I'm, I don't know, like really disciplined or like sleep well, eat well, do everything fine, like even then I won't get it. Like I won't feel the obsession, and I'm just scared that what might happen then, because then it'll be like, I can't say that I didn't work hard, or I can't say that, or I can't say that I didn't do what I was supposed to do. So I did everything, but I still didn't feel it. Like that's a fear that I have. I'm not saying that'll happen. Maybe I'll fall in love with this stuff and really it'll all become pretty effortless, and I'll really like fall in love with it and everything. How it's like, how everybody dreams of it happening. But I'm just scared that, like, I do everything right. I sleep, I'm well rested every day, and I'm putting in the hours and stuff, right? And it just like never happens. Like I just never see it. I'm just scared and afraid of like what will happen then, in my life. Like what would I do? What would I be? How would I make money? Everything. It's It's pretty scary. I mean, see, the idea of discipline is pretty attractive. It's pretty calming. It's pretty secure. That oh, like if you just do everything that's in your control, well, you will have a good life. Like sure, like for the most part, that's true. But it's like even when you do everything right, things may not turn out good, and like what do you do then? Like what do you do like when you don't know what to do? Like sure, you have all this discipline and all this work ethic, which I don't have by any means. All I'm saying is, say if I do, right? I'm just saying, like, if I have all those things, but I don't have somewhere to put them. Like, I don't have a trade. I don't have something of my own to put it in. It'll be like, what's what's the point of having all that discipline then? So I'm just scared of the day that might happen. I hope it never does. God forbid, touch wood. But yeah, man, it's already pretty scary when I'm not even disciplined and not even working hard. But if I do, and I still can't feel it, and if I still can't get obsessed with it, yeah, that would be a major problem. Because I don't want to be stuck in something for my whole life, and be mediocre and fuck, man. I mean, at that point, you can just go ahead and kill me right now, because what's the point? But yeah, gotta keep working right now because, yeah. So I'm just hoping that this first day was hard. I mean, it's not even finished yet. It's not even 5 p.m. right now. But, like, I'm really hoping that over the next a few couple of weeks, I can find my stride and I can really, really, I don't know, enter a flow state sort of and just eat through this book. I mean, I did Norman Lewis, but Norman Lewis was like nothing compared to this. This is like actual math, actual problems and stuff. So I don't know if Norman Lewis will be able to solve this stuff. But yeah. Anyways, let's keep going. FBN Inc. has just sold 100,000 shares in an initial public offering IPO. Uh, the underwriters' explicit fees were $70,000. The offering price for the shares was $50, but immediately upon issue, the share price jumped to $53. What is your best guess as to the total cost to FBN of the equity issue? So total cost, uh, $70,000. I don't know. Main. Oh, maybe it's $370,000 is my guess. Is what I'm guessing. So yeah, let's put this into DeepSeek and see what happens. I'm thinking the total cost is 370K is what I'm thinking. Might be wrong, might be right. I don't know. 70,000 is definitely in the cost because that's clearly given as the fees for the underwriters. Anyways, that was a good little talk I had there. But yeah, let's get back to work. Yes, I'm right. Only it's $370,000. Pretty simple to understand because it's like what they missed out on or something. Underpricing per share. Yeah, you never know. Like usually IPOs, like first, I don't know, 1 hour, couple of hours or whatever, everybody's optimistic or whatever, so it's like jumps up. So never buy in the beginning, like right when it starts, because it really jumps up and it's never the same like that. So I wouldn't say that it's a cost. Maybe for the day, but like fast forward a year and see if it's at that price. Probably be lower, or maybe higher also. Who knows? Actually, so anyways, yeah. So let's do that. Is the entire cost of the underwriting a source of profit to the underwriters? Uh, no. The cost is source. The entire cost is source of profit. Only the explicit fee, $70,000, represent direct revenue. The underpricing cost, $300,000, not a profit for the underwriters. It's a wealth transfer from FPN. The original shareholders and new investors who buy the shares at the IPO price and can immediately sell them at a higher market price. Underpricing is often a deliberate marketing and risk management tool to ensure the issue's success, not a direct underwriting fee. So let's go ahead and copy paste that into the document. No, must be. Okay, answer number two. Question number two, sorry. Let me see answer number two. Yeah, if you place a stop loss order to sell 100 shares, so let me put that there. It's all on my own first. So yeah, if you place a stop loss order to sell 100 shares of a stock at $55 when the current price is $62, sell the $62, how much will you receive for each share price drops to $50? $55. This is such a stupid question. Extremely stupid question. But yeah, I guess it's not a stupid question, it's like a very basic question. But yeah, stop loss orders pretty simple stuff. Option B, $55. Never do anything without a stop loss. Specialists on the New York Stock Exchange do all of the following except sounds like the phone vibrating and ringing. Anyways, specialists on the New York Stock Exchange do all of the following except act as dealers for their own accounts, execute limit orders, help provide liquidity to the marketplace, act as odd lot dealers. So I know they do C and D, probably do A also. I have no idea actually. How about we just put this into the DeepSeek. My guess is going to be option B. But you know what? Actually, no. How about we do option? How about we do option A? Act as dealers for their own accounts. Act as odd lot dealers. Explain. What does odd lot dealers mean even? Designated market maker. Dealers for their own account. Execute limit orders. Book limit order book. Help provide liquidity on the marketplace. Odd lot dealer, order for fewer than 100 shares. Oh. Okay. On round lot. Oh. So odd lot is basically like small number of Transactions like smaller amount of transactions, like less than 100 shares. Round lot is like 100 share denomination transactions. So that is pretty interesting stuff. How about we go ahead and mark that option D? That's annoying. Anyways, yeah, option D for the third thing. So that was a CFA problem. Pretty simple actually. Like way simpler than the problem sets. Jesus Christ. Anyways, Kaplan and Schweizer. Okay, now we have questions from the Indian perspective. Okay, answer 1. Visit the website of the Securities Exchange Board of India, SEBI. Ah, Jesus Christ. You know what? I'll stop the video right there, take a quick break, and then do questions from the Indian perspective as well as the e-investment exercises to finish the chapter finally. So yeah, not bad at all, but because it's already like 5 p.m., we probably won't be able to finish chapter 4 today. So 5 p.m. that means it'll take another half an hour to finish the other questions. 6 p.m. 6 p.m. That's 1.5 hours. 7:30, 8:30, 8:30. That's 2 hours. That's gives us 3.5 hours. Yeah, I don't think I can finish a whole chapter in like 3.5 hours. Could I? I mean, it is 20 pages. I mean, I could. I could maybe. Maybe. So, it's a pretty small chapter too. Mutual fund. You know what? I think I can actually. So, let's see. Chapters are varying lengths, so I might be able to finish chapter 4. That'll be fun. So yeah, I'll just have a peanut butter sandwich right now, and then I'll finish the questions from the Indian perspective and the investment exercise, like I said. So yeah, thanks.